The replay for those that are on live will be made available. If you send me a message and say webinar, I will send you a link to the copy of this webinar. Okay, and I promise I'll do better for y'all next time. But in the meantime, for those that have signed up and come on, thank you all for coming to the First Home Buyer webinar. I'm glad you're here. So if you're here live, that means you'll have access to the live Q&A at the end, where I'll take a moment to answer any questions that you may have about home buying. If you're watching the replay, welcome. Know that the live Q&A happens once a week. So if you want to ask questions directly, join us on Thursdays at 6:30 p.m. Eastern. All right, and we'll keep the replay available after every live session, so you have a chance to look at it, whether it's your first time looking at the webinar, or you watch the new one each week. Might get some more information from those that ask questions. But before we get started, quick question: how many of you are planning to buy in the next 6 months? If you're live here or on TikTok, drop 6 months in the chat. If you're watching the replay, just say it out loud to yourself. All right. Yep. Okay. All right. 3 months. Okay. All right. Good. 6 months. Right. So good. That tells me who I'm speaking to right now, because 2026 is the year of home ownership. If you're here, you're probably wondering things like, can I get approved for a loan? How much do I really need? Or what's secretly holding me back? So tonight, I'm going to go over and breaking the approval into 4 different pillars. I mentioned that about this webinar. There are 4 pillars to a mortgage approval. But first things first, here's some things about me. I've been in the mortgage industry since 2021. I'm a visual learner. I love video games, so I'm a video game expert. Probably because I'm a visual learner. But I specialize in structuring loans. Okay, so by the end of this webinar, you'll know how approvals really work, what lenders actually look at, and what you personally need to fix, if anything. And my goal isn't to overwhelm you. It's simply to give you clarity. All right. So like I said, I've been in the mortgage industry for a couple years in origination and in operations. I specialize again in structuring files. So there's a difference between quoting rates and structuring approvals. I've worked with buyers who've had perfect credit scores, and I've worked with buyers who were told no by some other lender. Most people don't get approved because nobody explains to them the rules, or at least explain it clearly to them. So let me ask you this. Have you ever been told by someone that you need a 700 credit score and 20% down? Right? Anyone been told that before? It's probably one of the biggest myths in real estate. Type myth if you've heard that before. And I've heard it before, plenty of times before I even got into real estate, so I know that it's a thing. But if you have, that's where I come in. So let's go ahead and break down the rules, right? So first thing, pillar number 1 is credit, all right? So we're going to go down all these 4 pillars to determine what's going to give us the approval, right? So we're starting with the first one, credit, all right? Yes, it matters, but no, it's not everything, all right? A lot of first-time buyers think, my score isn't 700, so I can't buy right now. Some people may even think, oh, my score is 660. I can't buy right now. That's not true. There are specific programs that allow at least a 580 credit score. There are programs that allow at least a 620 credit score. There's programs that allow extreme flexibility depending on the file and the program. Some programs don't even have a minimum credit score, all right? Quick poll, raise your hand. Who here knows their current credit score? Be honest. Raise your hand if you know what your current credit score is. Nope. If you don't, that's okay. I don't know what my credit score is. Now, here's the bigger question. Have you had any late payments in the last 12 months? You don't have to call yourself out on it. You don't have to raise your hand or anything like that. But have you had any late payments in the last 12 months? You see, what matters more than the credit score itself is your recent payment history. So as you see on the chart, credit score is made up of different factors, a mix of types of credit that you have, any new credit that you've opened up, the length of your credit, the capacity, the balance between what you owe and the max limit, right? But the biggest factor that makes that credit score up, is your payment history. A 640 credit score with a clean history can be a stronger file than the 720 credit score with late payments. Credit is a behavior pattern, not a pass-fail test. So if you kind of made yourself aware of that and you've been improving your credit in the last year, drop progress in the chat. If you've been improving your credit in the last year so that 2026 is your year to buy, drop progress in the chat. Same for those on TikTok Live. If you've improved your credit last year, drop progress in the chat. Okay? Now, let's talk about money. The second pillar is down payment. Quick show of hands, who thinks you need 20% down to buy? Who thinks you need 20% down to buy a home? Right? Like I said, many people have heard it before. I've heard it before. Most people do. Most people think that. You'll be surprised, but down payment is a spectrum. You have some programs that require 3% down, some that require 3.5%, some that require 5% down. In some cases, there are programs that require 0% down. But what people get confused on is down payment versus total cash to close. Those are two different things. Can your total cash to close add up to the equivalent of 20% of your purchase price? Maybe. Maybe not. Maybe it's much less. It just depends on how much you're putting toward the house itself and what you're putting toward closing costs. So down payment, closing costs are two different things. And depending on the programs, whether it's the program itself, or maybe it's down payment and assistance, or maybe it's just a matter of how the loan is structured, we can adjust the strategy, right? So that the down payment works for you, right? So let me ask you, if you had the right plan, how many of you would feel ready within 6 months, right? Just think about it for a second. If you knew how much money you need, right, and you knew how to get that money, whether it's saving or whatever, selling an asset or whatever the case may be, how many of you would feel ready within 6 months? Right? See? Clarity right there. You see what just happened? Most of you aren't far off. You just need the clarity, right? You don't know what you're doing if you don't know what you need, how much you need, right? But here's the key. Having money saved doesn't automatically mean you're approved, okay? So that's where pillar 3 comes in. Your debt to income ratio. This is a big one, debt to income ratio. We take your monthly debts, including your new mortgage, and compare it to your gross income. So, for example, if you were making $10,000 a month and your total monthly obligations were $3,500 a month, your debt DTI, debt to income ratio, is 35%. All right. If you made $5,000 a month and your total debts were $2,000 a month, you're at 40% DTI. Simple math equation, right? You take your income divided by your debts, and that gets you your DTI ratio. Most approvals fall somewhere between 43% and sometimes into the 50s, but it strongly depends on the program that you're using. But this right here, DTI ratio, is where most denials happen. Not your credit score, not your down payment, affordability. Does anyone here actually know their DTI? Show of hands. TikTok show of hands. Do you actually know your DTI? Nope. You don't? Okay. I don't know mine either. That's okay. If your DTI is the only thing holding you back, right? If you even know. But if your DTI was the only thing holding you back, would you want to know now or after you fall in love with the house? Would you want to know now or after you fall in love with the house, right? Most people will want to know now because you fall in love with the house, then you find out your DTI isn't gonna work. Now you're disappointed, right? So that's why strategy matters. If you're guessing about your DTI, you're guessing about your approval. Now, last but not least, pillar number 4 is your income and job history. We're looking at consistency of your work. We're looking at the history of your work and employment. And we're looking at your sustainability. If you're a W-2 employee, we typically look at 2 years of work history. If you're self-employed, we review tax returns differently than if you were W-2. If you make any overtime or bonus income or commission, those are usually averaged through pay stubs over the course of 2 years. If you're self-employed, type self in the chat. Okay? Type self in the chat if you're employed. Or self-employed, I'm sorry. If you're self-employed, put self in the chat. Yep, okay. Let's see it. See it going. Yeah, more people are self-employed these days. Just know that for those that are self-employed, different rules apply. Doesn't mean no. It just means things are looked at differently. If you changed jobs recently, maybe you're W-2 and you worked at one place and you just started working at another place a month or two ago, don't panic. If you're self-employed, again, don't panic. Income is just structured differently. One myth that I've heard before is you have to be at a job, the same job for 2 years. You just need to have work history for 2 years, okay? We're not trying to make any of this hard for you. We wouldn't get paid if it was near impossible to do, right? But we're trying to determine a number that's realistic for you long term. We're not just worried about, okay, can you afford the house right now? And then that's it. No, we want to determine that you can afford the house for as long as you need to be in it, right? So, to recap, approval really comes down to credit behavior, down payment strategy, debt to income, and stable income history. When those 4 things line up, approvals happen. Now, which one do you think is your biggest question right now of those 4 things? What do you think is your biggest question or issue? Your credit score, down payment, debt to income, or the income itself in your work history? Which ones are the biggest ones? So you can put it in the chat if you want. What's the biggest thing to you right now? Okay? Let me ask you something direct. If I could review your numbers and tell you exactly where you stand, would that reduce your stress? If I could review your numbers and tell you exactly where you stand, would that reduce your stress in whether you can afford a home or not, or what you should be looking at in terms of homes? Well, that is what the strategy call is for. Let me throw this in here for you. Bam. There you go. That's what the strategy calls for. After this webinar, if you see on the screen, you'll have the option to book a free strategy call with me. On that call, we'll discuss and calculate your real debt to income. We'll review your credit positioning. We'll discuss your down payment options, and we'll build a personalized game plan for you. No pressure, no obligation, just clarity, okay? If you're serious about buying in the next 6 months, I want you to do something bold, right? TikTok, if you're on, I want you to do something too. If you're on, do something bold. Click that link on the screen. If you're on TikTok, go ahead and send a message. Book a call. That's it. 3 words. Book a call. If you're on the webinar, click that link on the screen. Book the call tonight. Do it tonight. Click it tonight. Not next week. Not someday. The link will be provided to you after the webinar. But do it tonight. Do it. Be bold. Go ahead. Go ahead and book the call. You don't have to book it so that we talk tonight, but just go ahead and book the call tonight for when you're ready to talk. And let's have that conversation and see where you stand. It doesn't cost you to find out where you stand. But it does give you clarity, right? Now, when you do call and we do have that meeting, here's what speeds things up. So I recommend you get what's listed here on the screen as soon as possible. Get these documents: your driver's license, your 2 recent pay stubs, 2 years of W-2s. If you're self-employed, get your last 2 years of personal and business tax returns. Okay? If you just filed for 2025, use that 25 and 2024. If you haven't filed yet, give me 2024, 2023. Bring those with you. The faster we can review those documents, the faster we can move toward you getting keys. Okay? Now, this is the part where I'm going to open it up to anybody on the webinar. Any questions that you may have. Okay? Go ahead and put it in the chat because I am still learning this program. It's not Zoom. So I'm not too confident in muting, unmuting, and all that other stuff yet. But go ahead and throw it in the chat and let's answer some questions. All right. So someone already asked, what do you need for down payment assistance? So down payment assistance just depends on what program you use for down payment assistance. And you have your local programs that give down payment assistance. For example, I'm in North Carolina. North Carolina has different programs, but they do require, I believe, I haven't used it in a while, but I believe a 620 credit score. Don't quote me on it. But there are programs that require a 660 credit score. There's one lender that I'm connected with where they have a minimum 600 credit score, right? Just depends on the program itself to determine your credit scores. Good question there. How to save money? That's a tough question. I'm not too big of a financial expert. That sounds kind of like an accounting question. But as far as saving for down payment, first thing you need to know is how much do you need, right? So how do you know how much do you need? Once you find that out, then you budget. Take a minute to look at what you're making, look at what your expenses are, and kind of delegate it to determine how soon you can save up that money. Now, again, as mentioned before, there are down payment assistance programs available, right? So that could help ease that burden off of you if you're trying to save money for down payment. And can you use down payment for closing costs? Yes, you can. Matter of fact, there are some, I've known people who get down payment assistance simply because they didn't want to pay the closing costs. I want to say tomato, but it really does depend on what you, what the down payment is and what your closing costs are to determine which of the two you will want to pay if you do get down payment assistance and if it covers it all. But there are also other ways in order to lower your closing costs. One way is through seller concessions. So if you're looking to buy a house and the seller is willing to do so, they may be able to provide a seller credit, which is money toward your closing costs. You can't use it toward your down payment, but you can use it toward closing costs. So that that can lower your total cost as well. But that's something you would also want to discuss, not just with me, but with your realtor, as they would be the ones that negotiate that seller credit for you. That's a good question. Good question. Lates in the past 12 months. What if I had 2 lates? So it's not just about how many lates that you had in the past 12 months. It also depends on the type of lates they are. So when you have a late payment in the past 12 months, are we talking about 2 separate 30-day lates, or are we talking about a 60-day late? Was it a late on a credit card, or was it a late on an installment, like a car payment? Or was it a late on your rent or mortgage? Maybe you had a mortgage previously and you're selling and buying somewhere else. Late on a mortgage. A mortgage can definitely be an issue if you're not careful. The other things, the credit cards and loans, those can be, you be careful of those things too. But you also need to make sure that it is not a, if it's just 2 lates, then that's one thing. But you also want to make sure that you're not having a consistent amount of lates, or it's not part of a pattern, right? When we mentioned credit personality, I don't remember that's the same one. I'm sorry, my mind is horrible. Credit personality, I'll call it that. Behavior, I'm sorry, credit behavior. Your credit behavior can dictate whether you get approved for the loan. So if you're known to always have a lot of lates, the underwriter might be iffy to issue an approval for you. But if it was a one-time situation, and that one-time situation ended up lasting about 2, 3, 4 months, then there's an exception that can be made there. So it really just depends. Good questions, y'all. Good questions. Let's see. And awesome. So, okay. All right. So someone has started putting a couple numbers in here. I'm not going to read them out loud, but regarding income and debts and things like that. So what I don't want to do in the live Q&A, I don't want to go over specific things, something that's too specific. What I don't want you to do is put your information out here. Okay, so but what you can do is click on that button, book your call. Let's book a call so that we can talk and we can go over that in detail. Especially for a question like that, I'd much rather give you a specific answer that's useful to you, because that may not mean anything for anybody else. So anyways, that's a great question though. Thank you for asking that. All right, y'all. So if that's all y'all had, look, thank you all for coming on this evening. I will personally follow up with everyone who's registered and booked a call. If you haven't booked it yet, like I said, at the end of the session, you will get a chance. A link will be sent to you so that you can book that call with me, right? So as a reminder, live trainings happen once a week with the Q&A, Thursdays at 6:30. Replays run the rest of the week. So this particular webinar is going to be uploaded and made available through the replay links that I send out and share online, so you can come back and watch this. The strategy calls are available regardless of when you watch it. So I don't have to be live in order for you to book the call. You can easily just reach out to me, send me a message, and say, hey, book a call, and I'd be more than happy to schedule that with you. But the sooner we look at your numbers, the sooner you know where you stand, right? So last thing I want you to do is go through all or most of 2026 not knowing where you stand. If you want to buy a house in 2026, it's important that you know where you stand now. So take that leap, be a little bold, and book the call, all right? I appreciate all of your time coming on here. I look forward to helping you become a homeowner, and I'll leave you on this one note. Clarity creates confidence, and confidence creates action, right? So thank you, everyone, and I'll see you on the strategy call.